investment institutions are still wary of a possible investigation of reintroduction of prescribed assets. This has caused a great deal of concern in the investment industry. Financial experts say this is because of the negative impact that it would have on asset prices and therefore investor returns. Lack of investment, constrained fiscal space and high levels of unemployment have some believing that prescription in investment is a quick way to force investment growth. This sentiment was stated in the ANC manifesto and has caused quite a stir and some jitters in the market because economists believe more engagement to clarify South Africa's attractive investment destination, hence the Alexander Forbes Investments Indaba that takes place next month. To talk about this is the Executive Chief Economist at Alexander Forbes, Isaah Mhlanga. Thank you very much for coming, sir.
Thank you for having me.
Right. I'd like us to start this discussion with definition of terms. What are prescribed assets?
Essentially, prescribed assets are, it's a term that is used when government forces the private sector, largely pension funds and other financial institutions, to invest in specified assets which are deemed developmental assets. For instance, you could think about state-owned companies' bonds. Government can force, through legislation, financial institutions to buy government bonds. But obviously, you would prescribe something because its dynamics are not working as intended or are not working well. That's why you would try to force the private sector to invest. And it's not a new thing. We've had it in the 1960s to 1980s where pension funds were forced to invest in state-owned companies' bonds. And the result of that was that pension fund members were disadvantaged because the opportunity cost of investing in equities relative to investing in state-owned companies' bonds meant that their pensions were not growing as fast as they could. So there is a direct cost to the members who are pension fund members, who are your sister, my brother, mothers, and everybody that works and contributes to your pension. But also there is another cost that is incurred to the whole economy as a whole. Remember, we compete with other countries to attract foreign direct investment. And if you have non-conducive policies as far as investments are concerned, you are unlikely to be able to attract foreign direct investment, which is why we need to move away from the concept of prescription to try and develop our policy framework that attracts foreign direct investment, give incentives to the private sector to invest in specified developmental assets, yes, because they have an impact on employment and growth, but also the terms on which they invest is also clearly defined, and the return profile of those assets is also clearly defined. And once you have the returns which are clearly can be explained, it's quite easy to get the private sector to invest without having the need to prescribe.
South Africa is having a subdued economy now, and we've got, the highest unemployment rate in 11 years. And the trend indicates that the government has really been performing lowly in terms of job creation. Whereas on the other hand, the private sector has been seen as driving economic development in the country. I'd like us to take a look at a graph actually that depicts the trend in as far as economic development, as it will pop up on the screen now. And I just want you to tell me about a paradigm shift in terms of what happens when the government wants investments in SOEs, so that they should also be one of the key drivers of economic growth. I mean, like you look at where there was economic peak here from the year 2005 up just until 2009, 2010. But then when you look at general government private sector comparison, it shows that actually government is performing lowly. So is this not a positive move by government to lure the private sector and pension funds to say, look, we've got a strategy here to rejuvenate the economy, so come and invest with us because we are changing direction in terms of the management of these SOEs?
Look, if you look at this chart, you can see quite clearly that whenever the private sector is investing heavily into the economy, economic growth also picks up. And whenever private sector investment slows down significantly, the economy also slows down significantly. So it's quite clear that the private sector is the driver of economic growth. It's not government. If you look from an expenditure side, government only constitutes about 20% of the economy, and the remaining is the private sector. If If you look in terms of investment, over 60% is driven by the private sector, which is why we're quite encouraged by the President's Investment Conference last year. There's one that is coming up again this year, I think it's in November, which is not necessarily forcing the private sector, but to demonstrate the investment opportunities that exist in the economy and to come up with policies that makes it easy for the private sector to invest to invest in the economy. So yes, the private sector should come and invest, but government has a responsibility to put a legal framework that makes it easy and that makes it conducive for the private sector to invest.
Would you say that it's now conducive to consider investing into Eskom, given South Africa's economic woes in the energy sector? And if we're going to have jobs bloodbath at Eskom because of lack of investment and the kind of heavily indebtedness that the corporation finds itself in, wouldn't this option of prescribed assets work in a positive way?
Absolutely not. If you look at Eskom's financial sustainability, we had them release results a few days ago where they incurred a loss of just over 20 billion rand, up from a loss of about 3 billion rand the previous year. And if you look at its problems, really is because revenues are not growing as much because the corporate sector is not running at full capacity, and as a result it's not using as much energy. But also it means if you look at the renewable energy projects, despite the weak capacity utilization, every time the sun shines, Eskom has to pay because they signed offtake agreements, and that also puts a burden on Eskom. If you look at the capital spending, they have overspent relative to what was budgeted on capital projects at Medupi and Kusile. They more than doubled in terms of costs since they were initiated, which means they have not managed their budgets appropriately. 441 billion in debt. That does not say anything that is conducive for any private sector player to buy their bonds. So we're really quite constrained from that point of view.
My time is up now. You're parting short. What do you intend to achieve out of getting all the financial practitioners under one roof to really discuss and thresh out this issue of prescribed assets?
I think we need to move away from prescribed assets, move towards what we call impact investing, where you invest for both social impact, for environmental impact, but also for financial impact, all at once, which means the government has to identify projects that can impact South Africa from a jobs point of view, and also give a return to private sector who are bringing their funds into those investments. So that's what we would rather prefer compared to prescription. Impact investing, I think we have examples of that. The renewable energy projects, they were funded fully from the private sector because they could calculate the returns and risk profile from these investments, and it has been quite successful.
All right, Brother Isaah, thank you very much for coming. I keep on mixing up the names, but we really appreciate your time.
Okay, thank you.
All right, that's Executive Chief Economist at Alexander Forbes, Isaah Mhlanga, and we're going to take a break now.